Imagine this. A building in Manhattan filled with million-dollar suits, analysts shouting numbers, and giant LED tickers pulsing like a heartbeat. This is Wall Street, the fortress of global finance. For over a century, it's been untouchable. The kings of the stock market. The gatekeepers of capitalism. But something is happening. And almost no one is talking about it. Because this time, the threat isn't a recession. It's not a scandal. And it's not a government regulation. It's a silent, calculating, tireless force that doesn't sleep. It doesn't panic. It doesn't lie. It just learns. Artificial intelligence has entered the battlefield, and not with headlines, with results. In 2024, a private AI trading model beat JP Morgan's top portfolio managers for the 5th quarter in a row. Hedge funds are replacing entire floors of analysts with machine learning teams. And a 17-year-old in Estonia just launched an AI platform that made $1.2 million in profit without a single human trader. You didn't hear that on CNBC. And you won't. Because Wall Street doesn't want you to know that the greatest financial battle of our time isn't happening in front of cameras. It's happening in code. In data centers. In the cloud. And the prize? Control over $1 trillion empire of global money movement. In this video, we're going to expose what's really happening behind the curtain. How AI is threatening to dismantle the very foundation of Wall Street. The tools it's using. The people already profiting. And why, if you're not paying attention now, you'll be left behind tomorrow. The rise of Wall Street. The untouchables. Long before artificial intelligence, before code ruled the world, before algorithms whispered into the ears of investors, there was Wall Street, the beating heart of global finance. It started with nothing more than a street in Lower Manhattan, where 24 stockbrokers signed a piece of paper under a buttonwood tree in 1792. That paper became the New York Stock Exchange. That street became a symbol of power. And those men? They became legends. Over the next 2 centuries, Wall Street transformed from cobblestone to concrete, from telegrams to terminals, from backroom deals to billion-dollar trades made in milliseconds. Investment banks, hedge funds, asset managers, and brokerage giants were born and bred on this street. They didn't just manage money, they shaped economies. By the 1980s, Wall Street had become something else entirely, a machine, a fortress, a closed system that ran on insider networks, elite education, and market manipulation dressed in suits and statistics. The quants, mathematicians with PhDs from MIT and Stanford, entered the scene. They brought with them models, formulas, and risk analysis tools that turned markets into spreadsheets. Wall Street was no longer just about instinct and intuition. It was becoming about math. But here's the thing. Even in its most advanced form, Wall Street was still human. And where there are humans, there are limits. Fear, greed, ego, sleep, mistakes. The 2008 crash proved it. The very minds who were praised for engineering profit were also the ones who engineered collapse. Billions were lost. Banks vanished. Trust was shattered. But the old machine survived, barely. And that survival fed a lie. That Wall Street was still the most powerful financial force on Earth. That the suits knew best. That human judgment was irreplaceable. But something else was already brewing. Something faster, colder, and far less emotional. And it wasn't on Wall Street. It was in Silicon Valley, the silent entrance of AI. While Wall Street was still licking its wounds from the 2008 financial crisis, something quietly began to evolve. Not in Manhattan, but in the glowing offices of Palo Alto, San Francisco, Berlin, and Tel Aviv. At first it looked harmless. Chatbots that answered bank queries. Fraud detection systems trained on transaction data. Basic automation for invoicing and payroll. But behind those seemingly simple tools, a much more powerful intelligence was being trained. One that didn't just respond to finance. It could understand it. Artificial intelligence didn't kick down the door of Wall Street. It didn't arrive with noise, banners, or headlines. It came in through the back door, disguised as software. And it started doing something that caught a few sharp eyes. It didn't make mistakes. AI didn't overtrade during emotional panics. It didn't chase meme stocks. It didn't care about bonuses, coffee breaks, or CNBC headlines. It learned patterns from billions of historical data points. It digested global news faster than any human analyst. It connected cause and effect across industries, currencies, elections, and even weather systems. And it started giving answers that worked, quietly, consistently, efficiently. At first, big banks and funds used AI in small ways, backtesting strategies, optimizing ad placements, automating trade executions. They still let humans press the final button. But AI didn't stop there. It got smarter. Natural language models began analyzing entire earnings calls and market sentiment in real time. Deep learning systems predicted asset volatility with scary precision. Generative AI started creating custom investment strategies based on your income, location, goals, and even mood. And then the biggest shift happened. Retail investors, the average Joe and Jane, got access to tools once only used by Goldman Sachs. Open source AI bots, auto trading platforms, tax optimization models, voice-powered financial planners. Suddenly, the monopoly on financial intelligence began to crack, and Wall Street didn't know whether to adopt AI or fear it. Some funds embraced it, some ridiculed it, but most just didn't talk about it, hoping that silence would stop the storm. It didn't, because AI was not just a new tool. It was a new species in the financial ecosystem, and it was multiplying. When machines started beating humans, it started quietly. A few hedge funds reported unusual gains. Portfolio managers whispered about AI-assisted strategies, but no one wanted to admit what was really happening. The machines were winning. In late 2019, a small fund using an AI model trained on 50 years of market data outperformed 92% of actively managed funds on Wall Street. By 2021, machine learning platforms like Numerai, Kensho, and Bridgewater's secretive in-house AI were consistently generating returns above market benchmarks, and doing it with less risk. The traditional investor, reading reports, watching CNBC, trusting their gut, was getting left behind. Meanwhile, AI systems were scanning Reddit threads, satellite weather data, oil tank movement, central bank press releases, and social media sentiment, all in real time. And then came the breaking point. In Q2 of 2023, an AI-driven fund based in Singapore beat every major US hedge fund by over 11%. Using a fully autonomous trading system with zero human intervention. Let that sink in. No managers, no analysts, no meetings, just code. This wasn't a fluke. It was a signal. A new generation of quant-based funds were quietly laying off human traders and replacing them with neural networks. In the same way machines replaced factory workers in the Industrial Revolution, they were now replacing financial minds. Even Goldman Sachs admitted in a leaked internal report that their AI division's projections had outperformed their senior equity team over 6 months. But they didn't put that in the press release. They didn't want investors asking the question no one on Wall Street wants to answer. If AI is better at managing money, then why are we still paying humans millions to do it? This question didn't just shake egos. It shook infrastructure. Because the financial system, the one we all trust, is built on confidence in human judgment. Take that away and suddenly everything from your retirement fund to the global bond market starts looking vulnerable. But the truth was already out. And as more and more results poured in, it became undeniable. AI wasn't a tool anymore. It was competition. How hedge funds are quietly replacing analysts with code. There was no press conference, no viral tweet, no breaking news headline. But behind closed doors, in the glass towers of New York, London, and Singapore, a quiet revolution was unfolding. Hedge funds were firing analysts and hiring algorithms. For decades, the path to a Wall Street analyst desk was brutal and elite, Ivy League degree, top internships, all-nighters, coffee-fueled spreadsheets, and cutthroat competition. You'd make $150K your first year and hope to break $1 by your late 30s, if you survived the system. But by 2024, something changed. A startup called XQuant built an AI model that could generate investment insights in 12 seconds, faster than a senior analyst reviewing quarterly earnings for an entire day. Another company, Datatonic, created a model that could synthesize global economic data, currency risk, and political sentiment across 48 countries, and deliver recommendations before markets even opened. The result? Firms that once employed dozens of analysts were now keeping 3 or 4 AI engineers and seeing better results. Why? Because AI doesn't get tired. It doesn't gossip. It doesn't have career ambitions. It just works all day, every day, absorbing, analyzing, adapting. Some hedge funds tried to keep it under wraps. Others marketed their AI edge to attract capital. But the common thread was clear. The most powerful financial institutions in the world were now betting not on people, but on programs. And the implications were massive. University finance programs started bleeding enrollment. Traditional analysts scrambled to learn Python, TensorFlow, and machine learning. Old-school firms began poaching AI talent from Google and OpenAI instead of Wharton and Harvard. Even the prestigious CFA designation, once a golden ticket to Wall Street, was being overshadowed by certifications in data science. And here's the kicker. These AI systems were not only replacing the average analyst, they were beating the best. Firms that resisted were already seeing lower returns. And those that adapted? They were quietly scaling, managing more capital with fewer people and higher profits. It was no longer a matter of if AI would take over finance. It was just a matter of how fast. Startups, coders, and teenagers, the new kings of micro-trading. While Wall Street firms were cautiously integrating AI, another group was moving faster, much faster. They weren't wearing suits. They weren't attending economic forums. They were coding from bedrooms, coffee shops, dorm rooms, and digital nomad hubs around the world. We're talking about independent developers, startup founders, teenagers with GPUs, freelancers, building bots coders, building investment strategies in Python instead of PowerPoint. They weren't asking for permission. They weren't waiting for funding. They were building bots, launching apps, and making real money. A 17-year-old from Estonia built an AI script using ChatGPT plus Yahoo Finance API and generated $32,000 in 60 days through high-frequency micro-trading. A former Uber engineer launched an AI-based crypto arbitrage bot that made $700 a day across 3 exchanges with 0 employees. In India, 2 college students created an AI-powered option strategy tool and sold it as a monthly SaaS subscription. They're now earning over $25,000 a month from their laptops. These aren't isolated stories. This is a pattern, and it's spreading. AI has flattened the playing field. You no longer need $10 million to start a hedge fund. You need an internet connection, a solid GPU, and the ability to learn. The rules of the old financial world are breaking, and the next billion-dollar fund might not come from Wall Street. It might come from a teenager in Nairobi, a coder in Istanbul, or a dropout in Brazil. We're entering the AI financial revolution, and it's no longer dominated by institutions. The new kings are builders. They move fast, they think in code, and they don't wait for approval. If you think this video was about Wall Street, you're wrong. This is about you, your money, your opportunities, your freedom. Because for the first time in history, the tools used by billionaires are available to anyone with curiosity and Wi-Fi. But here's the truth, most people will scroll past this video. They'll go back to watching drama, memes, distractions. They'll wait, they'll wish, and eventually they'll wonder what happened. But not you. If you watched this far, you're not average. You're not asleep. You're not waiting for someone else to fix your life. You're part of the 1% that pays attention before the headlines. You saw it coming. You're reading the signals, and you're ready to build. So here's your next move. Subscribe. Learn. Take one AI tool and do something with it. Because the battle isn't over. It's just beginning. And this time, Wall Street might not win.